Hi, I'm Mark Rosano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today, we're going to go through the EIA data, and we're going to break it up into our normal segments of the overview, refined products, and then looking at the export market and just what's happening in the international world. And then we'll follow that up either coming out on Friday or Saturday, looking at OPEC in general and what are some of the changes that we've seen as they've updated the official selling price or the OSP. And then we get some more data coming out on Thursday in terms of what their expectations are for demand and supply. So jumping right in, we're going to, it wouldn't be October if we weren't talking about another hurricane, unfortunately, given how this year has gone. And right now we have the Hurricane Delta path. So here you can see the Hurricane Delta path. It's weakened from a 3 to a 2 as it's run into Mexico. That has resulted in some shutdowns within the Mexican ports. And here you can see what the path looks like. So it should be veering, hitting, and going straight into Louisiana. Right now it's a 2. It should strengthen again back into a 3 as it goes over the Gulf of Mexico. And then we did our normal backdrop where you can see the boats moving out of its way, getting clearing its path. We now have about 56 platforms, and as we were preparing, I think another one just announced from Exxon. So we're up to about 57, and again, this will be updated because we're filming now at 12:30 on October 7th, and by the end of the day, we'll get a new update. That's equating to right now about 541,000 barrels a day that has been shut down, and about 233 MMCF a day on the oil side. So right now, the other big impact that we're expecting is the Loop, or the Louisiana offshore oil port. That has now ceased operation ahead of the storm. So again, that is a big port that's required really for exports and imports. So those are things that will have some short-term impacts. Now, the other issue is going to be what's going to happen at the refiner side. So right now, the refiners have talked about reducing rates. So far, no one has shut down because of this. So we will get some oil coming off and then again coming back on relatively quickly. So it'll always come down to how quickly can we get power back to refiners, and if they lose power, as some of these individuals are still struggling after Laura. So here is just going to be a matter of timing. So there will be a little bit of hiccups. And again, that's also going to go into gasoline demand as people won't drive as much, specifically in this area. So again, it's going to be a little, we're going to have to smooth out some of the data as we start to look forward. But this is what we're seeing right now. We should see about another, just based on some of the data points so far, another 250,000 coming off, putting us closer to the 800,000 barrel a day range. Again, it's going to come down to how does this change direction. So it's something to watch. It will have an oil impact. But again, with like anything else, weather is transitory. So here, we have to get a little specific because it says crude stocks draw, but at that point, we're including the SPR as you have to, as we continue to see some of the commercial space continuing to come out of the SPR, the Strategic Petroleum Reserve. On the commercial side, in terms of what is deemed normally commercial, there was a small build of 500,000 barrels. Again, it was really driven based off of Pad 5, which is the West Coast. And the one that we're starting to focus more, kind of hone in on more is the Cushing. Because right now, Cushing continues to build, and that's going to put some additional pressure as we look at realized prices and as we look at, what kind of discount do we need to see to get oil into the open market, which we're going to talk about in our third segment. Pad 3 had a decent draw of about 2 million barrels. That's something that is, again, going to be transitory as we see the hurricane impacts. We had some things pulling forward to get in ahead of the hurricane, as we saw with some of the clusters in terms of where those ships are. We had a true up in production. As we've been saying, we're about 11 to 11.1. There was an increase of 300,000. Again, very much expected. That will come off in reflection of what is being ramped down ahead of the storm, and that will quickly come back just based on the way these offshore facilities are positioned. Looking at it with the SPR, you can see we're back down to the top range, but again, we still remain grossly oversupplied, just given for where we are. It's starting to flatten out, which is a little concerning when you consider that we do have pressure in exports, which we'll talk about, and as we guided to last week, and then we're starting to see those slowdowns start to ramp up on the refining side. We had a little bit of a pop, which we'll talk about, but again, that's going to come off relatively quickly, especially as we've had new announcements of rollbacks so far today, and again, it's something that's going to continue as we go through October. On the Cushing side, this is what we wanted to talk about, because typically, we got really close to everyone was talking about tank tops and what's going to happen within April, but now we're getting the slow grind higher, and it's really coming to we're getting a little bit more production in terms of new frac spreads, in terms of guys coming back, but refiners just aren't really running at the levels that they normally are, even for the shoulder season. And we're starting to see that creep as guys are putting crude into Cushing. And given the spreads are so tight going into the coast and really getting into the international market, specifically into Europe, you're seeing more left in Cushing itself, which if it keeps this trajectory, which just based on what we're seeing so far is highly likely, we're going to start to hear the rumors and rumblings as we get into November of, what is the functional space, how concerning is this? And then we'll have to see some of these prices come down to get some of this WTI Cushing, in terms of a pricing to get it out of storage. Now, when we look at, excluding the SPR of what is normally commercial, again, we're at seasonally adjusted all-time highs, nothing crazy there. And it's just that we're starting to flatten out, and we're starting to see, we saw a big build in Japan. We're starting to see some larger builds in some of the international markets, which again is just putting that weight on the inherent oil situation as we look at the physical world. And as we look at specifically pad 3, you can see that we're still at the top of that range, making that what will eventually next year be that top line as we continue to see refiners just underutilized. Exports dipped pretty substantially. We had imports increase a little bit, and this is something that's going to get bigger as we have refiners that are shutting down or rolling back, and it's just going to be a matter of, well, how much production comes off. We're going to have exports slow, but we're also going to have imports slow, and then what are the refiners going to do while Hurricane Delta passes through? So going a little bit deeper, especially as we look at imports, you can see that we had a decent spike across 4 levels. And the one to really talk about or at least look at is Canada, because we continue to see increases in Canadian imports. So at this point, U.S. weekly imports of crude oil from Canada rose 9% to the highest since July. So that's something to look at. And in the OPEC show coming out later this week, we're going to look at, well, what is Canadian flow imports doing versus Saudi Arabian flow? How is that changing? Is it something that's going to be continuous in terms of just where the pressure is going to be on, maybe we don't need Saudi Arabia, especially as Canada works through some additional deals to get additional flow into the Gulf of Mexico. So that's something to keep an eye on. Obviously, pad 3 imports are going to drop as we have, obviously, the hurricane. The loop will be an impact. But so that's going to be a little transitory, as we've talked about. Runs had a nice little pop of about 1.3%, getting us to about 77.1%. We were expecting something to either be flat or down. And if you look, it was pretty well dispersed across pad 2, pad 3. But so far, we've had new announcements, specifically from Chevron in San Francisco Bay. They're shutting down their sole FCC, or fluid catalytic cracker. And that's something that's going to last for about 7 weeks. So that'll appear in pad 5 or the West Coast. And then we have additional slowdowns as we look at the Gulf of Mexico. So we do think that's going to come off, and it should come off relatively large, whether it's a mixture of this week and next week, but we will see that rollback and start getting towards that 74, 73%. Implied demand is one thing that we saw a nice little pop, specifically in gasoline, and we'll talk about that more in segment 2. But we saw a decent move out with, if we look at from storage into from refiners into storage, and then as storage to the rack, and then we actually saw another nice pull through from the rack to the pump and into the consumer, which we'll talk about with some of the great Gas Buddy data that comes out weekly. So those are things that we think could have a little bit of a of a run. Not to say that it's going to get back to normal, but it's nice to see a little bit of a normalcy. Distillate, again, it's just going to be ebbs and flows. That we had a nice little pop. That's something that we think will normalize as we go through next week or the week after. And it'll be interesting because distillate is going to have trouble once we get out of harvest season, as we get out of when grains are moving. But it's nice to see a little bit of a work off, especially at this level. And then jet fuel, well, jet fuel is going to struggle overall. Just there's no real saving that. As we look at floating storage, we had a little bit of an increase. That this should continue to increase as we have some additional VLCCs in transit into the U.S. If you go back to, or if you remember what we talked about when we showed the picture of the hurricane, you see all the vessels moving. Again, just remember, when vessels are actually in motion, they have to be stationary for 7 days to be deemed floating storage. So this will drop, and it's not that floating storage went away, it's just it had to move, and then it'll get recounted. But again, it's something where we're going to continue to trend closer to the 5-year average, not get to it, but we will continue to trend up as we go through the remainder of the month. And as we look at imports, again, it's just going to marry with what are the refiners doing in PADD 3. So we're right at the bottom of that level. I don't see, we as we talked about last week, we're just going to kind of continue. We'll fall within the cloud, if you will. But again, we're just going to be bumping along the bottom with no real need to pull in, especially as we continue to see additional Canadian crude coming down into the other pads, which will make their way into PADD 3. So it'll be a little bit of a difference as to where does the crude originate from. And just rounding out this specific segment, we always want to talk about the refinery utilization rates. Again, you can see that that dip there was from 2005, 2008. So we're still well below where we should be on a seasonal level. Now, we had a nice little increase again from that 74 to 77, but it's something where it's not going to continue up. It's going to flatten out and start to go lower and get closer to our kind of 70, 72 range as we go into the remaining of October. And it's really coming down to, again, lack of margin, slow demand, and just what does that look like, especially as we go into not just the end of shoulder season, but what does Q4 look like, and then how are we positioned as we go into 2021.